much aversion are you hearing about from your clients when it comes to investing in China at the moment?
The number one question really I hear is, has China now become uninvestable? How are foreign investors, with this clear-cut message from Beijing that they are last on the list of any concerns that they might have, value risk in the unique environment that China is for the foreign investor?
Okay, so what's your answer to that? Has China become uninvestable for the foreign investor?
Well, we changed our call on the Chinese equity market straight after the RRR cut to get out now. But at that time, that was a more short-term call over the next 6 to 12 months based on the whole deleveraging growth slowdown story. But after the most recent actions, this really is a call that I would extend to the next 2-3 years until it becomes clear how China would actually interact with the foreign investor, because we are in the era of the great decoupling, the bifurcation of the world economy, markets, politics into two spheres of influence, a Chinese one and an American one. And the capital markets are caught in that, very much so, and foreign investors that invest in China would be potentially, we can't discount the fact that they can be caught as pawns, if you'd like, in this great power competition. So it's an extremely difficult situation, and one which for the sort of immediate future, and by the way, that concerns more so our US and European clients on the European side as well, in particular. ESG concerns or considerations make China very difficult to assess, much less so in Asia, though, because that would be the natural sphere of influence that China would like to acquire, and the story there is somewhat different.
Okay, so if the foreign investors kind of last on their list in terms of what they care about, what do you then make of China's efforts to reach out to the U.S. and open up the door of communication when it comes to IPOs? Is this not sort of a crack of light in terms of trying to accomplish a more symbiotic relationship?
Not really. If you see, you have to see where this is coming from. I mean, the CSRC is not the regulatory body that really calls the shots. Your commentator just before me gave you an account of the Politburo meeting and what came out of there. There wasn't a sort of strong message coming out of that meeting that they're reaching out anything beyond the usual words that they have employed in trying to deal with the US at the moment. I would say that to an extent, the Chinese Communist Party is kind of on the back foot at the moment, because any hope that they had with respect to possibly putting a floor under the deterioration in relations with the US under the Biden administration has gone out of the window. The Biden administration has been as tough, but much more experienced, well-organized, and as such more effective in the constraints that they're putting on China. So this is still very much all up in the air, and I don't see this as being resolved anytime soon, or any white flags on either side being properly raised.
Right. Okay. So, I mean, that's really fascinating. You know, it's going to take a while for us to figure this out. Don't buy the dip. But Diana, what do you do if you already have lots of investments in China? Are you also saying, okay, maybe it's time to re-examine those and pull those out? Or is it just not about adding on more exposure to the region?
Well, the Chinese equity market first has no relation to economic growth in China whatsoever over the years. It's very much driven, though, by domestic liquidity. And bear in mind that the assault on the education sector was very much as well a domestic hit to those businesses, rather than just totally disregarding the foreign perception of investors. So My advice would be that on any upturn that is engineered by domestic liquidity returning, the foreign investors should have a very clear assessment as to what their exposures are, which sectors, try and also determine how the risk-reward balance works out, and then exit anything that doesn't have a very clear exceptional return outlook for, I would say, within the sort of 2 to 3 year horizon. But even that's
Right.
probably too far.